Hey traders, Shane from GMT Futures and FX. I want to take you through today the input that we have within our strategy called max wins and max losses. So what this input does is it allows you as the trader to determine at what point you're going to finish for the day as part of your trading day. So it's a way to obviously minimize your risk and also to maximize the potential of your system too. If you're having a great day and things are going really well, then you want to be trading in the market. But if things aren't playing out as well as your system should be, then you can potentially have a circuit breaker or a cutoff. So we're going to use our failed trend system to do this analysis. So I'm going to take you through how the failed trend works, and then we're going to have a look at having that overlay of max wins and max losses as part of our strategy input. So let's have a look at the failed trend first. I've got crude on 1,000 tick bar, and the failed trend basically you would have seen, or hopefully you would have seen, a few videos where we talk about our trend trader system. Our trend trader is where we use our dynamic support and resistance, our proprietary indicator, to identify potential trending long trades and short trades. Now a long trade will come up with a cyan candle, a short trade will come up with a white candle, and that's basically your entry point for the trend. However, what we've noticed with the trend system is that you occasionally get these failed trend breakouts. So situations like that, or potentially down here where we have a break of support, which is our green support bars down the bottom here, but nothing happens really. We don't get any follow through. So that's where we want to potentially take a trade in the opposite direction. So we call that our failed trend, and we'll show you how that sets up. So the way that sets up is there's our entry candle there. I've got that vertical line showing our entry candle there at 9:15.06. Now what happens is, to get a failed trend set up, we need price to close back above the high of this short candle. So that would get us into a trade, because that's telling us that setup candle has been broken in the opposite direction, and we're trying to go long now. So you get that here where we close above. There's our entry point there, and we're long on the failed trend, and our trailing stop is basically support resistance, or it could potentially be the TP. We'll add that in, our take profit. So let's add that little indicator in, because it's really good at tracking or trailing our stop. So let's just grab that now, GMT take profit, there it is there, and that just gets that's a good way of kind of marking out where we are as far as the trade. But you can see we get taken out there, we get into a short trade. So we're in a long, we haven't been stopped out, but this gets a failed trend short. So the same rule applies. Your setup candle is your indicator for the entry. So it's the low of, obviously it's going to be the low of a long candle. So if we close below the low there, we're going to get an entry, and you can see there that candle there, and we'll pick the timestamp on that as well. The timestamp on that is at 10:44. That gets us short, and then we get taken out for our trailing stop. So that's basically how the failed trend works. So it's nice and easy. You can see here we've got two trades in the morning session. So we could potentially have got a third or a fourth trade here.